What's up everyone, I'm Steven and welcome to my channel. This video is all about TD Ameritrade options trading. I'm going to talk about what options are, show you how to apply for options trading on TD Ameritrade, and show you how to trade options on TD Ameritrade with a specific example. My channel is about 90% investment, 10% speculation, and 100% wealth creation. If this is the type of content you enjoy, go ahead and hit that like button and that subscribe button. Options are a challenging and exciting asset class. There are many types of options and option strategies. For the investor, options are a fantastic way to hedge, generate income, and for traders to speculate in the market. TD Ameritrade is known to provide an industry-leading, low-cost premium options trading experience with no base commission and just 65 cents per options contract. I also happen to be a long-time user of TD Ameritrade, so not only do I know the platform inside and out, I will take you on a tour of my account and show you what options trading looks like. Let's start with talking about what options are. Options are financial instruments that are derivatives based on the value of underlying securities such as stocks. An options contract offers the buyer the opportunity to buy or sell depending on the type of contract they hold, the underlying asset. Now let's show you how to apply for options trading. Go to Client Services. Under My Profile, hit General. On this screen, options trading is under Elections and Routing on the right hand side. I've already been approved for Advanced Options Trading, so it shows Advanced here. For you, it will show None. And instead of a button for About My Level, there will be an Apply button you will click. Click on the Apply button. This will bring up an options application that you will review and edit. The application will ask you for personal information related to your employment, financial information such as income, net worth, your investment objectives for the account, and options experience. Based on your personal information that you will answer, you'll be approved for one of 4 options levels. The levels are determined by how sophisticated the option strategy is and the higher levels of risk associated with them. When applying for the first time, you're most likely going to be approved for level 1 or level 2. You may be approved for levels 3 and 4 depending on your assets and level of experience. Level 1 is covered, which includes covered calls, cash secured puts, and married puts. Level 2 is standard cash, includes buying calls and puts, and all of level 1. Level 3 is standard margin, requires margin, and includes covered puts, spreads, and all the previous levels. Finally, level 4 is advanced, requires margin, and includes uncovered calls and puts in all the previous levels. For levels 3 and 4, standard margin and advanced, you will be applying to add margin to your account at the same time. It could take anywhere from the same day to a few days to get approved. Once accepted, you can confirm your options level by going to Client Services, My Profile, General, and next to Options Trading, you will see your options level. Here, you can see information about the trading strategies associated with your level of approval and apply for an upgrade to your existing level if it was not approved for Advanced. After you are approved, you'll be able to trade options. To trade options, go to Trade at the toolbar on top and hit Options. Under Option Strategy, you will see various option strategies available. Single order, covered call, vertical and calendar spreads, straddle, strangle, and a custom entry. Today, I will demonstrate a single order, specifically a long call option on Apple stock. Let's enter the underlying symbol AAPL, or you can use the symbol lookup. By entering a long call in the Apple, we'll have the right to buy Apple once it reaches the strike price of our option contract. We are making a speculative bet the Apple price will go up. Hit the options chain next to symbol. At the top, you will see the symbol, expiration, and strikes. For a long call, let's adjust our expiration date to January 21st, 2022. We see calls on the left-hand side, strike price in the center, and puts on the right-hand side. refer to the bid column if you are selling and ask column if you are buying. If the stock price does not reach the strike price by the expiration date, the option will expire worthless. For a call, the option will be more expensive with a lower strike price, and the further out the expiration date is. Let's go ahead and select Apple with an expiration date of January 21st, 2022 and strike price of $150 as demonstration. Once we select the option, we can enter the quantity of contracts we want to purchase. Each contract is equal to 100 shares of the underlying stock. So if you buy one contract, that refers to 100 shares of the underlying stock, Apple. Let's enter one contract. We will keep the order type as limit. If you hit the lock icon, it will populate with the current price, $945 for the option contract. And if you hit it again, it will lock in the price. Now, if the price of the options contract goes up above $945, your limit order will not execute. If you want to have the fastest execution, you can change the order type to market order, but the price change fluctuates. So let's go back to a limit order. Keep time in force as day and hit review. Then review your order. You will see a 65-cent commission, and if everything is good, hit place order. Congratulations, you have now bought a long call option. Hope you guys found this video helpful. If you enjoyed this content, please like the video for that algorithm, subscribe and hit the notification bell for more videos delivered to you. Leave any questions and comments you have below. I love hearing from you guys and I read all of them. And you guys have a great one.